Hello, welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified investment and security specialist, and been investing for the past 2 decades. In the course of this video, I would like to carry out a fundamental analysis on this company, Ellah Lakes PLC. Ellah Lakes is a company in the agricultural sector of the Nigerian stock exchange. And let's start with the company's revenue. As indicated on the board here, the company generated a revenue of 146.658 million. 146.658 million during the full year 2025, as against 19.746 million in the full year 2024. There was a revenue increase from approximately 20 million to about 147 million. That's a huge increase indeed. That's somewhat remarkable and commendable. So for the company's gross profits, the company generated a gross profit of 19.746 million in the full year 2024, as against a gross profit of 130.056 million. So from 20 million to about 130 million. That's a healthy increase, a healthy growth in gross profits. So we come to the company's profit after tax. This is where the problem lies, in its profit after tax. The company had a loss position of 1.428 billion naira. 1.428 billion naira, as against 1.875 billion. But there's an increase in the losses, all right, obtained here from 1.4 to 1.8, approximately 1.9 billion naira. So you could imagine a company making revenue in millions and sustaining a profit in billions. There's something fundamentally wrong with the company, in the sense that its losses far outpace the company's revenue. All right, that's what is indicated in the company's financials, that the company makes returns and make revenue in millions and then sustain losses in billions. So we want to look at the company's earnings per share. For the earnings per share here, you discover that the company had a negative earning per share of 71 kobo, all right, as against a negative earning per share of 60 kobo. The company's losses decreased from 71 kobo to 60 kobo. So there's a little improvement, there's a little growth actually. There's a little reduction in losses from 71 kobo to 60 kobo. Well, that's a slightly positive development. Actually, we have to comment that. So we are through with the profit and loss segment of our analysis. We want to look at the the company's balance sheets and cash flow statement. This section of the table represents a summarized, bare bone, skeletal version of the company's cash flow statement and the balance sheet. So the company has a cash position of 2.2 or 2.962 billion, 2.962 billion. That is quite commendable. At least it's not having a negative cash position like some companies do. The company is still cash healthy. It has approximately 3 billion naira in cash, despite the fact that it sustained close to 2 billion naira in losses. So there's still stability in the cash front. Now, for the company's equity, that's it is asset minus its liability. The equity or shareholder fund here is 22.014 billion, 22.014 billion naira. So the company's balance sheet is still strong. All right. It only has a problem in the profit and loss segments of our analysis, but for the balance sheet, it has a strong balance sheet. At least it's not having a negative shareholder fund or equity and a negative cash flow. It is not. So the company's equity per share is 5 naira 70 kobo. This particular figure on its own is not really saying much. This is the company's book value, but in combination with this or in comparison to this, all right, that's you compare 5 naira 70 kobo with 15 naira 30 kobo. Generally, if the difference is much, that shows the company is it's expensive. The difference is somewhat small or narrow, then the company is considered cheap. Now, for the company's PE ratio, all right, considering the fact that the company has negative earnings, the PE ratio is going to be nil. All right, there'll be no value here. If you divide 15 naira 30 kobo by minus 60 kobo, you arrive at a negative figure. That's why the PE ratio here is nil, it's empty, it's not considerable at all. So the market capitalization is 59.3 billion, 59.3 billion, and the shares outstanding for the company is 3.86 billion. All right, 3.86 billion, and the company share price is 15 naira 30 kobo. 15 naira 30 kobo. So although the analysis here is for academic purpose, is for entertainment purpose actually, but I will hesitate to give any recommendation because the company's financial is somewhat, the company financial is somewhat dicey. All right, the cash is there, the equity is there, but unfortunately the earning per share is negative, but it is improving. It's improving. And I heard of recent, I think last year or so, the company had a public offer. Okay, so just hold your money. You may not really buy now, and wait. When the fund or the public offer comes in and the fund is rightly utilized, there could be an improvement in the earning per share here. In other words, so the company could start making profits when the money they've raised is deployed in the company's operation. So I would advise we remain by the sideline and see what happens to the company. All right, you may not really buy for now. Just wait and see what happens when the fund they've raised in their public offer is deployed in the company's operation. Please like this video and subscribe to this channel if you've not done that, and equally help me share this video to members of your community. And more importantly, if you are interested, in investing in the stock market, and you need, a kind of hand holding, a kind of guidance, a kind of portfolio management, please, you can reach out to me. Let me see how I can be of assistance to you.